Ladies and gentlemen, good day and welcome to the Q4 and FY 2023-24 earnings conference call of JTEKT India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management of JTEKT India Limited. Thank you, and over to you.
Good afternoon, everyone. Let me introduce the team members present from JTEKT side. My name is Rajiv Chana. I am Director and CFO at this company. Mr. Hitoshi Mogi will be giving the inaugural remarks. He is the Chairman and Managing Director. And we also have with us Mr. Minoru Hatanaka. He is a full-time director. Mr. Yasusuke Doi, he is the head of MD office. Mr. Kawano, he is the department head of sales and marketing. Mr. Rao, he is the advisor in the design and development and key department. And Mr. Shyam Sundar, he is the deputy department head sales and marketing. I hand over the call to Mr. Hitoshi Mogi for the inaugural remarks.
Okay, good afternoon, everyone. And I'm Hitoshi Mogi. I'm the Chairman and Managing Director of JTEKT India Limited. And welcome to the JTEKT India Limited quarterly earnings call. I'd like to thank all participants for joining this call and organizers. First of all, touch with the Indian economy. India's GDP growth rate for FY24 recently come into the better than expected level of 8.2%. RBI at its recent monetary policy announcement raised the GDP growth forecast for FY25 to 7.2% from 7% earlier. The central bank retained the FY25 inflation forecast at 4%. Sustained price sustainability would set a strong foundation for a period of high growth. According to ICIR, supporting underlying factors such as raising per capita incomes, demographic profile, low vehicle penetration, and favorable policy environment, including infrastructure development, are expected to help in the growth of automotive sector demand at the steady pace. ICIR has projected a CAGR of around 6 to 9% across the automotive segment over the medium or long-term period of time. So we have been closely watching the growth trend and announcement for capacity expansion made by the OEM, including our largest customer, Maruti Suzuki. During my last interaction with you, I informed you that the company will soon announce the expansion of our production capacity. I hope our investors have read the recent announcement made by the company at the stock exchange for capacity expansion. We announced in December 23 and February 24 for setting up 2 additional lines for MSQ. And in February 2024, we also announced doubling the CVG capacity. And now I would like to discuss with you the company's financial results. Financial results for Q4 FY24 are now available with you. In Q4 FY24, JTEKT India achieved the highest ever sales of 6,300 million, which was 19% higher than the sales achieved in the corresponding quarter last year. For the financial 24, JTEKT India achieved the highest ever sales of 22,000 million, which was 10% higher than the sales achieved in the previous year. The growth of 10% sales was better compared to passenger vehicle segment market growth of 7%. The company has achieved a consistent increase in its EBITDA margin. EBITDA margin touched 11% in Q4 of FY24 compared to 9.4% achieved in the corresponding quarter. For the full year, EBITDA touched a level of 9.5% in FY24 compared to 9.1% in FY23. An improvement of more than 0.4% shows management effort to improve margin and control of fixed assets. Lastly, I would like to also inform that Honorable NCLT New Delhi paid its order dated 12th December 2023 approved the scheme of amalgamation of JTEKT Fujitsu Automotive India Limited with JTEKT India Limited. The state order of NCLT was filed with the Office of Registrar of Companies on 1st of January 2024. Since both the companies are part of the same value chain involving production of CEPS, which is electric power steering. Hence, there exists natural synergy. The merger has opened up several opportunities toward production and cost rationalization to enhance our competitiveness in the market. With this, I'd like to thank you for your participation and open the conference for questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you have any questions, please press star and 1. Our first question is from the line of Manoj Baheti from Carnelian. Please go ahead.
Hi. Good afternoon, everyone. Good afternoon, Rajivji.
Good afternoon, sir.
So first of all, congratulations for good set of numbers. So I have 3 questions. First one is if you can help us understand the write-off which we have done during the quarter towards some adjustment in the receivables. What exactly the nature of that? Was it fraud, whether the money has been taken out by someone? So that is my first question. If you can help us understand the details of the transaction and also to which year that transaction, original transaction belonged to. Was it like prior to the change in hands in the company or the recent one?
Understand. Yeah. So I think these, let me explain the nature of these transactions. So these were unidentified reconciliation entries, and these were pending in our receivable accounts. These entries actually pertain to deductions which were made by OEM from invoice value due to change in sale price, but not accounted for by us in the past periods. And these entries, as you asked, are pertaining to a very old period, more than 5 years old. Backward of 2019, backward from 2011 onwards. So very, very old entries which were lying as unreconciled balances in our books. So during the current year, we discussed with our stat auditors, and we thought that we need to clean it up because we were not able to trace this entry, the rationale for these entries. So based on our discussion with stat auditors, we hired an external agency, it's a KG Somani and Company. It's a very renowned firm of chartered accountants, and we carried out a detailed forensic audit. The purpose was to establish the nature of such entries as well as the exact value of these transactions. So the total value of 77 million was charged to profit and loss account in the current financial year. March 2024, we charged all this amount. And we have accordingly reported this matter to audit committee, which in turn has reported the matter to stat auditors. Our stat auditors will now review the report as well as the observations of the audit committee and will decide if any further step is required. As decided in consultation with our stat auditors, since the amount of 7.7 crores is not material, considering the PBT of 145 crores for the year, no adjustment of the past period financial has been done. If you know that accounting standards require that if there is a past period error, this must be accounted for in the past period, unless these are considered immaterial. So these differences were not considered material, hence there has not been any past period adjustment. The entire amount has been taken as a bad debt in our current financial year. So management has also taken necessary steps to ensure that no such similar error exists, and that was the whole purpose of involving independent agency KG Somani. We could have done this exercise on our own, but in consultation with auditors and audit committee, we decided let there be a professional independent firm doing this analysis, and then let there be a formal report to ensure that there is no further hit or no further entries which are pending. So we have received recommendations also from KG Somani and Company to establish additional internal financial controls. Internal auditors of the company now will be supervising the implementation of these internal controls to avoid any recurrence of such errors in future. So two things. One, these pertains to the very past period. These are unreconciled adjustment entries, have been completely verified by an external agency. The complete hit has been taken. The amount is immaterial, and therefore no past period adjustment has been done. And we have closed the entries in the current financial year.
Great. Thank you so much. It is helpful, Rajesh. Thank you for the clarification. Just one related question to this. If I adjust for this 7.7 crores, our EBITDA for the quarter is upward of 12%. So can you also attribute the reason for such a meaningful jump in EBITDA margin, and how you think on the sustainability of these margins?
Yeah, thank you so much. If we look at the profit margins, I think Mogi-san has already covered that. The company has achieved consistent increase in EBITDA. It touched 11% in quarter 4, even after taking this exceptional hit of 7.7 crores. And this is very high compared to 9.4% which we achieved in the corresponding quarter of the last year. Full year, I think full year are the more relevant numbers, where we touched an EBITDA of 9.5 compared to 9.1 in 2023, 0.4% improvement. This actually shows efforts of the management to improve margins and control fixed costs. These are sustainable. Why? Because we have the increase has happened through several factors, including the merger, which has just been completed. So benefits of merger have already started pouring in, and we expect that these can only further improve. If we look at improvement areas, I think you must have seen our financial results, and maybe I may explain a bit about that. Whenever a new business is won based on competitive bidding, initial period, the cost of production, mainly material cost, is slightly high. This is followed by various initiatives which are taken by the company for reducing the material cost through VAVE, localization, and negotiations. While we have seen an upward movement in material cost in the current financial year, however, we have made our best effort to contain other cost elements, especially fixed costs. Just for the information of the investors, in the area of employee cost, the company has taken several initiatives involving rationalization, the digitization of manual and routine activities and productivity improvement. And this has actually helped us to reduce the employee manpower cost. If you look at the current manpower cost, it touched a level of 10.1% in 1920, which was as high as 13.4% in 2019-20. Along with that, you must have seen there's a complete control on the administrative expenses. So over the midterm period, the certain initiative which are being taken by the company, and we are very sure that this will help us to improve margins further. Better price negotiation with customers for the new orders, expansion of exports, localization of certain critical components for our new product CVJ. I think there are many activities which are in pipeline and progressing successfully. And we are very sure that we are able to retain this margin in the future periods as well.
Great. Thanks for the clarification of this, Rajesh. And great to hear on the margins part that the initiative of the companies are working. So my second question is on the capex which you have done both on the CVJ side as well as on the CECS. Just wanted to understand that with the current round of capex, what is the potential revenue possible once that capex gets over, and what is the timeline of this capex? And after that, I have one last question, if I may ask that also.
Okay, I think it's a relevant question, so we will like to answer the question. If we look at for the financial year 24, which we have just completed, we incurred a total capital expenditure of 1,700 million. And this included setting up one additional PDC machine, pressure die casting machine of 850 ton. Existing, we have we are increasing our die casting capacity. We have apart from that, the new product development which are happening, it accounted about 270 million of capital expenditure. We had capacity expansion for certain child parts of the CPS, warm shop, warm housing, intermediate shop, accounting for about 270 million. One additional activity which was a different type of activity is that replacing our diesel generator set with PNG. Environment point of view, yes, and because there have been several environment regulations which were troubling us, so we have replaced all our diesel generators with PNG generators. Costed us about 85 million. Design and Protocell Center, which is continuously spending money every year to improve our technical capability, 44 million was spent. And then maintenance capex like procurement of dies, etc., that was about 460 million. And MSDR, which we reported last time, the new line which is under setting up, we spent about 124 million. So this was, as if you will understand from my explanation, is that most of the money is going into future capacity building. So that's where the most of the money has gone. So at present, we are working on the third CPS line, whereby we'll be increasing our capacity from 10 lakh units to about 15 lakh units. And we are working on the sixth manual gear line, which will increase our capacity from 23 lakhs to about 27.5 lakhs, around 4.5 lakhs more. The capital expenditure on this will be upward of around 1,200 million. So this is one major capital expenditure which we are planning in the current financial year. You must have seen our stock exchange reporting in December 23 and February 24, setting up two new MSDR lines. And also February 24, we announced setting up one more CVJ line. There will be some capital expenditures which will start doing in the current financial year, but it may flow to the next financial year as well. Coming to how we are going to fund this capital expenditure, the cash generation for the current financial year was about 1,870 million. And this was sufficient to meet our capital expenditure requirement of 1,700 million plus dividend payout of 179 million. There was a small increase in borrowings, about 500 million, and that was mainly towards funding our working capital due to increase in business. We have a corporate guarantee from our parent company available, JTEKT Corporation, Japan, and therefore the company has got an access to very low cost funding for our future capital expansion. So we are gearing up, and there will be additional capacity expansion which will keep on happening, and we'll keep on reporting at our regular investor call as well as stock exchange reporting. If you have any other specific question, you can ask, please.
Yeah. One last question, Rajesh. If you can also touch upon how you are seeing the exports. You have also notified to the exchange about one export order win. So how the export trajectory is likely to be company over next 2-3 years? And as well as any chances of any new product introduction from your parent bucket to India, any talks are happening in that direction?
Okay. So, on the exports, I think at our last investor call, we reported that our discussions with our group entity in Brazil are in final stages. And we hope you have noticed our stock exchange reporting on 11 December 2023 about receipt of final purchase order from JTEKT Brazil for supply of steering components. JTEKT Brazil is a group entity of JTEKT Corporation Japan, and which is our holding company. So the total at the start, the volume will be around 1.14 lakh units, and this will get us an additional sales value of 450 million. Total value of the order actually depends on the final customer demand. However, as per our current estimate, this will be in excess of 1,800 million. This will be our first success in our efforts that we have been making for the last 2 years. So we are very happy to announce that. SOP of this business is sometime in 2025-26. After this SOP, the percentage of our export sales will increase from our current 4% to about 6%. And another thing, the effort which we are doing in respect of increasing our exports is our customers in US. They are very stable, and there has been a gradual increase. There are 2 main customers in US, which is E-Z-GO and Club Car. Just to quote you a few numbers, in respect of E-Z-GO, where we export rack and pinion, manual gear and column assembly, the total value of export was 561 million in 2023-24, which when we compare with the total value of 475 million last year, it shows a growth of 18%. Similarly, for Club Car, where we supply steering gear, the total value of export was 274 million compared to 230 million in the previous year, showing an increase of 19%. So we are very, very aggressive with our existing customer, as well as we are trying to find out more opportunities for exporting. We are working with E-Z-GO for their new model also. It's a Liberty Golf Quad model. SOP is in the current month, and this will give us additional volume of small 10 million. But yeah, we are continuing with these entities to develop more models for export purpose. So we are looking at it as this is first opportunity which has crystallized. We'll keep looking at export of component, export of steering gear in future as well, and we'll keep on reporting that to you.
Great. And on new product introduction?
Yes, so see, we need to wait. We need to stabilize things in India. There are opportunities available. I will not shy away to say that there are more opportunities are not available. There are opportunities available for bringing in more product. There are opportunities available for exports of component. Many opportunities are available. We'll keep sharing that. At this point of time, we do not have anything to share because that's not in the public domain, so we can't share at this point of time. But yes, we just can say there are opportunities available.
Thank you so much, Rajesh.
Thank you, Manojji. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. Our next question is from the line of Tushar from Peace Wealth. Please go ahead.
Hello? We can't hear you.
Tushar, your line is unmuted. You can proceed with your question.
Can you hear me now?
Yes.
Okay. Thank you for the opportunity, sir. My first question is, what is the revenue mix that we have from different OEMs as of Q4? And how can this number look like, say, 2 years out if we consider the current pipeline of vehicles that are coming in from different OEMs, be it Toyota or Renault-Nissan Group, and as well as Honda export side? So just to understand some color on that. So that is my first question.
Okay. So just to give you the breakup for the financial year 24, Maruti Suzuki is 54%, Toyota is 12%, Honda is 8%, Mahindra and Mahindra 9%, Renault is 3%, Tata 2%, exports 4%, and the rest is aftermarket and other small products. So going forward, I think, as I said, export, we expect to increase from 4% to 6%. We are working with several new models of Maruti and Honda, and we expect that business will increase, but we do not expect a major kind of a shift in our share of business of the different OEMs. We are working with almost all the OEMs for their new developments, and we hope that the share of business may be little bit changed, but not significantly.
Okay. And sir, like we get almost 100% business of Toyota, 90% of Honda, if I recall this number correctly. So what is that number for Renault right now?
Renault Nissan is less. You know, that's not, if you look at the total business, it's split between Mando and us. So that's not 100% with us.
Okay. And sir, what is the current utilization of all three segments, which is CE, PS, MS Gear, and CVJ at present?
Current utilization on a two-shift basis for both MS Gear and CPS is upward of 90%.
At present, you are saying, right?
We are expanding. We have already planned our new CPS line as well as new MS Gear line, and the activities are in progress.
Okay. And one last question, sir.
Please.
So yeah, I mean, under driveline we had introduced CVJ. So I just wanted to understand from JTEKT Corp side. So, I mean, how many products that we have under driveline for JTEKT Corp? I'm not asking you what we can add from there, but just to understand how big this business is from the driveline perspective.
So, I can give you the numbers, some numbers on the CVJ, but I will not be able to share the totals. You know, like steering, we got a complete system which we are supplying to our OEMs. Driveline, we are supplying certain products of the driveline combination, but we are not supplying driveline as a system at this point of time. There are other products also which form part of driveline, which we are not manufacturing. Coming to CVJ, if you look at, I think these will be some good numbers which I would like to share with you. The current value of CVJ is supplied as a set. There's a two unit which are supplied as one set for one particular car, and the current price is around 5,600 which we are supplying. And there is a possibility, as we have a improved technology, the price can go up to 7,500 also. So when you look at that, and when you try to compare content per car, if we look at CPS which we are supplying and we take some kind of an average number for that, though the value will change model to model, say we take it 12,000 as a number, and we take CVJ as 6,000 as an average number, which means that we are going to increase content per car by as much as 50%. So it's a major change which has happened, and it has opened up a big opportunity for us. There is a competition involved, but the way we have started, we are just about 5% of the market at our current capacity, and we will, as we'll be doubling our capacity, we have aspiration to increase this business because, this will help us to improve content per car in a big way. So these are the activity which we are doing, and we'll keep sharing with you. Other than that, there are products available in the driveline segment. We are not a supplier of a complete system of driveline. Yes, we agree with that. But as we will have more opportunities open up for the Indian market, we'll keep reporting that to you.
Okay, and if I may just squeeze in one more question, sir. Can you please, is it possible for you to name all the models that we are serving to for all the OEMs, major ones?
You mean to say Maruti Suzuki, for how many models we are supplying?
Yes, which models for Maruti and Mahindra, like that?
That's a huge list, my dear. Can you call me separately? For example, if I start counting all the models, it will be like...
I'll write your IR. Yeah. I really appreciate it, sir. Thank you so much, and all the best.
It turns into many sheets, actually.
Okay, sir. Thank you so much. Thank you for the clarity.
Thank you so much.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone.